Commonwealth Bank share price has fallen more than 10% since its peak a month ago, which qualifies as a correction. And the bank index is down 5%. Now, as I said last night, they are expensive. Less so now than they were, but not cheap yet. Today's quite chunky falls by the banks were offset by CSL and the miners, so the market as a whole went sideways. There was more interest than usual in today's RBA minutes because there were 3 dissenters from the decision to leave rates on hold this month. Here's what the minutes said about that. The dissenters placed more weight on downside risks to the economic outlook, which is pretty much a statement of the bleeding obvious. But the rest of the minutes suggest they were more right than the other 6, so it looks like being a unanimous cut in August. Now, the RBA's own estimate of the neutral rate, which neither stimulates nor contracts the economy, is less than 3%, which means the current cash rate of 3.85% is very restrictive. And even if it is cut 1% this year, which is twice more, borrowing capacity to buy a house will still be 10% below the actual price of houses. On global markets, the US was up a bit. Asia markets were all over the place. The iron ore price jumped another 2.7% last night while oil fell again, and the Aussie dollar stayed just about 65 US cents. Australian meat exports to the United States are about to pass Canada's for the first time in a decade. The shift began with Canada's drought, which cut its cattle herd to the lowest since 1987. And it'll continue because of the 35% tariff that President Trump says will apply to imports from Canada next month, which is more than Australia's 10%. And that's finance.